Hello. So I'd just like to show a new asset allocation tool that I've provided in a spreadsheet for both premium and standard members. Now this is a personalized spreadsheet available to any of our members that can be adjusted to your own individual situation. So how it works is I've broken down equities into Canadian, US, and European, and included many of the largest, strongest dividend paying companies that I believe are the best bets for relatively safe income. Many of these I own myself, have owned in the past, or am considering owning. So I've just created a model portfolio here. It's nobody's in particular, but I've put in share amounts for all of the different stocks. Now in reality, you're not going to own this many stocks, but just to show how it works, I've put in share amounts for all of these different Canadian stocks, and that's all you have to do, and it will automatically calculate the dividend income from each of these equities on an annualized basis. So if you buy 400 shares of TD, you put in 400, it will tell you you're going to make $960 in dividend income annually from TD based on $2.40 per share and 60 cents per quarter. It also tells you when the ex-dividend dates are. Now this is all updated in real time, so if TD changes their dividend, I update it immediately and you will have the new payout updated in your database. Also, the price is linked to the actual market price, so it will show the price of TD, currently $65.12, and it will show you the market value of your holdings, $26,048, as well as the percentage that this holding represents in your total Canadian equity portfolio. So again, I've put in share amounts for all of these different stocks, anywhere from a fraction of a percent to 3-4% of the overall Canadian equity portfolio. And as a whole, all of these holdings together would have a value of $732,000, of which you would collect just under $29,000 per year in dividend income, which gives you an effective yield of just under 4%, which is pretty good for a portfolio. So if you have this much invested in these stocks, you would earn $29,000 a year, and this helps you plan for the future for retirement, or possibly you're already in retirement, knowing how much money you're bringing in and, more importantly, where it's allocated. So I've broken it down by sectors so you can see if you have a very, very large weighting in financials. So for example, before the recent recession, if you were heavily weighted in financials, especially in the US, you were hit pretty hard. So you don't want to be overly exposed to any one sector. So you can see if, okay, 50% of my assets are in financials, perhaps I should bring that down a bit and add exposure to other areas. Also, if you have too much exposure in oil and gas, perhaps you don't like that sector, you want to bring that down, you can see what your exposure is, both in terms of asset allocation and in dividend income. Or if you think, okay, possibly I'm going to see a rebound in energy, maybe I'm going to pick up some of these oil and gas names and hopefully get a bounce both in the overall price of the stock as well as their dividends. So this way it's broken down and you can ensure proper diversity. Now, obviously I'm not just going to provide Canadian stocks. I've also listed US, so many of the largest US players that pay solid dividends, and I've created a pretend model portfolio there. And I've also included European, if you're able to and would like to get some European exposure. Then I've included fixed income, so you can enter any fixed income that you have. So I've done it on an annual, semi-annual, quarterly, and monthly basis depending on your fixed income. So if you have a $25,000 investment, you can put in the maturity date, how many years out it is, the interest rate, and it will calculate automatically the maturity value, the interest value, so the maturity minus the principal, and then the average annual interest, so how much you're going to collect each year from this investment. So obviously the one that's just 1 year, you collect $375, but ones that are 5 years, it's going to divide it by the 5 years and give you how much you earn per year. If you have 5.5 years, you can put 5.5. You can do partial years as well. So all of your fixed income investments will be included as well, and calculate how much you're earning on an annualized basis. Then all of this is automatically transferred over into your overall portfolio. So you can see your Canadian equity allocation that we had, $732,000, is automatically transferred here. You don't have to do anything. It takes it from those previous values. You just enter the stocks you own, how many shares, and everything else is automatically calculated and updated in real time. Fixed income, again, will be taken over from the fixed income sheet. So you enter what fixed income you have, and it gets brought over here. And then you can see the percentage breakdown of all of your holdings. So how much you have in Canadian equities, Canadian fixed income, Canada overall, US equities. If you want US fixed income, you can put that in as well. European equities, and then your total asset value. Then it also calculates annual dividends and interest. So that amount from your dividends in Canada, we had $29,000 plus your fixed income earnings. So how much income you're getting annually from Canadian sources, US sources, and European sources. Then it'll give you the total amount earned per year in Canadian dollars. And you can convert this to US dollars if you'd like. I'm doing the Canadian example here. I've got the currency conversions for the euro and the US dollar. So this way you can see what your annualized income is and whether it meets your goals. If you're at retirement, then you can have a set amount and see if your income is meeting those goals. If not, you can adjust your numbers somewhat, maybe take some asset allocation, move it around to try and reach the goals that you want. If you're not in retirement, you can put in the amount that you think you would require in today's dollars. So I put 50,000 just as a nice round example. And the number of years you expect before retirement. So I put 25. So based on the 2% inflation rate, right in the middle of the 1 to 3% target band, that would be 82,000 in the future. So this could be the goal. Again, keeping in mind that dividends will often increase over time, and even fixed income could be increased over time as we get higher interest rates. So this allows you to plan for the future as well as the present. Now, financial advisors, they're expensive, and a lot of times they don't really give you a lot of help on a daily, weekly, even monthly basis. They'll meet with you once in a while, have a quick look at the portfolio, maybe tell you to invest in something, but they're not constantly there monitoring it for you. So what we've done here is created an asset allocation tool that you can check on a daily basis. So if you want to combine it with our trading services as well, where you get a daily newsletter, you can see if a stock's up or down. You have a takeover, a stock's cutting the dividend, raising the dividend. All of this will get updated immediately, and you can see how it's going to affect your portfolio. You can also see if you have too much of a weighting in one sector, one individual equity, and you don't have to pay the ridiculously high fees of financial advisors. Even robo-advisors, a little cheaper, but they're not going to be tailored towards you and allow you that control that's provided here, where you can constantly be monitoring and altering your portfolio. So hopefully this is something that you can benefit from and that will help you reach your financial goals. Feel free to contact me anytime through any of my social media, email daytradecanada@gmail.com or through the website, which will be linked in this video. Thank you, and good luck with your investments.